Hey Brenda, I'm so grateful you're here. During these crazy times, I am very grateful for our Fairway Mortgage, Better Homes and Gardens Franklin Group partnership. In these times, we have to work together to get the information out to our agents, to the agents' clients, to the people who have loans in your pipeline, to the mortgage officers. We need to be there for them. So even though neither one of us enjoy doing this, we're going to do it. We're doing it. So here we are. Big question. When the Fed introduced 0% rates the other day, I think the majority of us understood that we weren't going to be giving out 0% mortgages. However, a lot of our clients have questions and we want to answer them properly. So when someone says, what are the rates? Are the rates going to go lower? Are the rates going to go higher? What should they say? What should our realtors and your mortgage officers say?
Yeah. Rates have been really interesting the last couple of weeks, just like everything else. And everybody knows a couple of weeks ago that rates were really low, close to 3 on a 30-year fixed rate mortgage. They were really good. And they started to rise quite a bit. They got up a bit higher, high 3s, maybe low 4s. And then the Fed cut the rate. Well, the general public doesn't really understand the Fed rate cut. They think that does mean mortgage rates are going to drop immediately. And my phone went off immediately. I got texts and I got emails and people saying, are rates really at 0? Well, the Fed rate is really the Fed rate that they're charging banks for money. So it's not an immediate direct impact on mortgage. Does it have an impact on mortgages? Of course it does. Sometimes that's a good impact and sometimes it's not a good impact. So you can't think as a consumer that automatically rates are going to get better just because Fed cut rate. And this particular situation certainly holds true. Because right behind that Fed rate cut, the Fed's also injected a couple $1 trillion into the system, which is something they don't normally do. And the direct result of that is in the last couple of days alone, I don't even know if you know this, Kathy, but in the last couple of days, rates have risen up a full 2% in rate.
Wow,
Yeah.
a full 2%.
2%, yeah.
So kind of going from like 3, 3.2, 3.4 to like 5.
Closer to 5, yeah.
Wow.
Yeah.
So that's scary. Now, do you expect them to stay there?
Well, I think that I think the industry gurus who really follow all the indexes of what's driving interest rates and what's happening in the markets have kind of indicated that this, hopefully, I don't know about their crystal broken ball like mine is, but hopefully it's going to be a short-term problem. That rates are going to be up for a while. We've got a lot of other factors impacting rate. What's going on in the world right now, of course, certainly has an impact. But they do think that long-term this year, we're going to experience lower rates again. So that's really great news. Short-term problems. So we have a lot of people who are locked. Those locks will be honored. They'll close. And then we have people that are getting approved. They're not locked, but they're hopeful that they can at some point.
Okay, so let me play this out then for realtors and how a lot of times realtors right now are showing homes by virtual tour. They're writing offers. We just had 8 earnest monies turned into our office yesterday. So people are going under contract. They may not be locked right now. So I'm just kind of thinking this through as I'm learning this information from you. So, for example, someone with a $300,000 home. With this pandemic, it was slowing down the amount of showings. They just happened to find the home of their choice. They're not locked on their interest rate. They're all pre-approved. In fact, they've been pre-underwritten and everything. They didn't want to lock because they were thinking there might be a dip. So we got them under contract. And to be honest, there was only 2 offers instead of 6 offers on this awesome $300,000 home. So we think they've saved a little bit of money on the purchase. So if they did decide to go ahead and move forward and close, just say at 5.2 instead of 3.2, how much of a difference would their mortgage be?
Right. Of course it depends on loan type and all of that good stuff, but let's just say it's a $300,000 loan as an example. The difference between a 5% rate and a 3% rate or 5.25%, it's probably very close to $300 a month, $250 to $300 a month.
Okay, $250 to $300, depending on the type of loan, down payment, all of that. So if I have someone who was able to get a home, because there was multiple offers going on before the pandemic hit, and we none of us know where we're going from here. But we do know we need to answer questions. And so I can say to my buyer, all right, if you close at 5.2 and instead because you need to be in your home. They're in their parents' basement with 6 kids,
Right.
you know. So you need to be in your new home. Payment is probably going to be $250, $300 a month. So maximum, just say $1,800 over the next 6 months, you'd be paying out of pocket, but you'd be in the home that you need to be in. And 6 months from now, Brenda could probably refinance.
Absolutely. You know, if rates do what we think they're going to do, the industry thinks they're going to do, and they do come back down to these historical lows that we were experiencing a few weeks ago, the refinance business is right back in place. And people, even people that are in their homes now, anybody who had a rate over 4, they're going to want to refinance. And so, you know, you make those payments for 6 months, you come in and you drop that payment, and you're still way ahead because you've got the home now.
So that's interesting. So what you just said too on the refinances, because we were getting clients asking us about refinancing too. So if their rate is below 4, they should just sit tight for a while. But if their rate is above 4, they should still be contacting you and getting in that pipeline.
Absolutely. With this fluctuating market that we're in, what we've done at Fairway is, you know, we've got a lot of people locked now who did take advantage of the low rate. We have some who didn't take advantage, didn't get their applications in fast enough. Get your applications in. Call us. We've got a big list of who wants to refinance so that as we're watching the fast fluctuations up and down, we're well positioned to get you locked. I'd rather have you in my pipeline, approved, ready to go, work done, the day the rate drops, unlock your loan and you're good to go, than call you and put you in and then have 100 other people call me and we can't get your loan done fast enough for a lock. So I think it's really important if you're above 4, above 4.5%, 5% right now, and you feel that you missed this particular refi boat and it's coming back and will help you, we're here to do that. So reach out to the loan officer you're working with and get in their eyesight, get in their list.
Even during these crazy times, the partnership between Fairway and Better Homes and Gardens is strong. And we are here to answer any questions. You can call us directly. My number, Kathy, 801-726-3984. And Brenda?
Brenda Stoney, 801-808-9111.
And what we'll both do is be there to answer questions minute by minute, week by week, day by day. It's going to change. The key thing we need to remember is we can't let it paralyze us. We still need to move forward in our business. We need to encourage our clients, you know, for the realtors and the mortgage officers that we're speaking to move forward with their business and help their clients get pre-approved, and they can be looking online. We can give them virtual tours. We don't need to stop. This is the perfect time to be doing something because some people's fear will stop them, and we're not fearful people. Thank you.